Kitco Mining special coverage of BMO's 33rd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.
The rains are clearing for New Gold. This is Paul Harris for Kitco Mining at the BMO Metals Mining and Critical Minerals Conference in Hollywood, Florida. And joining me today is Patrick Godin, President and CEO of New Gold. Patrick, welcome to Kitco.
Thank you.
Patrick, you took over the helm about 20 months ago. You came from Pretium. What was your task when you came to New Gold, and what did you see when you took over?
A lot of possibilities. New Gold had two nice assets. I was familiar with the block caving method, and as I work in BC, New Afton is a good asset. So I was attracted by this. And Rainy River, we had opportunity to improve a lot. I'm more interested by adding value with my work and with the people of the company. So I saw a lot of opportunity, and I think at Rainy River, it was to stabilize the operation. It's what we did: stabilize people, improve the health and safety at site to increase the retention. And now we can see the mine is de-risked. We are in advance in some tasks that we plan to do, and it will have a possibility to drain a lot of cash at Rainy River going forward. And we are on time at New Afton for the execution of the season. So I'm really enthusiastic.
Excellent. Well, 2023 was another tough year for the company, but it does look like you've turned that metaphorical corner. Production of more than 400,000 ounces of gold. All-in sustaining costs came down to $1,545 per ounce. Your sixth consecutive quarter of delivering to plan. What were the key improvements and why?
Key improvement, it was mainly at Rainy. So New Afton the mine was really well organized. So we did better in B3. We did better with the block cave in terms of performance, in terms of throughput. And we had excellent technical result at New Afton. With the tailing deposition, we are in advance in all the phase of our project. But that's more at Rainy River when we de-risk a lot. We de-risk the pit execution. We complete the mining of the overburden. We complete a small extension of the open pit that we are now using in pit west down, so we're saving a lot of opportunity there. We accelerate the development underground, and because we had to deal with major flood, we all having to deal with global warming. And we had the worst 7 in 1,000 year last year, so we decided to do a big push and de-risk the company, and we raised the tailing storage facility by 2 meters this year. It was a great work for the people. Going forward, we're not at risk at all. And the thing is, we improved the reliability of the mill. So now it was the opposite before, but now 75% of our downtime were planned. And we increased the mill recovery by 1.9%. And we reduced all our consumables because we have a steady feed in the mill. So it was mainly the bottleneck at Rainy. And now people are stable, people are enthusiastic. We promote a lot of guys. No, it's really nice. It's not the same company. We're really pleased by the attitude of my colleagues.
Well, congratulations there. I guess some of the key questions are, to what extent can you get that all-in sustaining cost below $1,500 an ounce or even further? And, when will you return to a net profit?
Yeah, but first, Rainy generated $55 million of free cash flow in 2023, so it's not bad. Going forward, in the company at large, we provide for the first time 3 years outlook. So I think it's positive because we believe in our plan and we de-risk our asset. We're more comfortable to release these guidance. At Rainy, this year we are more heavy loaded in terms of capex in the first half. And the second half we have more production. It's more 40-60. But the inflection point will be more mid-2024 looking forward. In terms of cash flow generation, we have the open pit is mainly because the AISC will reduce because we have the big phase 4 pushback is actually in 2024, mostly in the first half of the year. So in the sustaining capex, it will reduce. We have less expenditures on the tailing storage facility. We'll increase the development rate underground, but it will come with higher production from underground. So basically, it's what will drag down the AISC looking forward. We have major impact in 2025 and 2026 on the AISC and at Rainy River. At New Afton, B3 is 0.6% copper and mostly the same in terms of copper and gold grade. When we transfer to C-Zone, the grade is higher. and by 0.1% copper, slightly more for copper, for gold too. And we are also increasing the mill throughput for 8,000 tons per day to 14,500 tons per day. So it's a big, we increased copper production by 60% at New Afton, and we'll have also the gold factor. So combined two assets together will increase from 2023 to 2026, the gold production by 35%. So basically it's what will drive significantly the AISC is the fact that we increase the production. And also at New Afton, a block caving mining method is a great mining method, but the default or the cons is that all the capital is upfront. So it's a project of 685 million Canadian, plus a bit of sustaining going forward. All this money will be invested at the end of 2025. We have actually, so it will reduce the manpower, will drastically reduce the utilization of equipment after that. That's why the AISC will go down significantly as we project in our guidance.
It's good to see a happy face on the CEO of New Gold. It's been a long time coming. Now, you said in your results conference call a week or two ago that you expect this year to be transformational for the company. It sounds like you've just explained why you're getting over the hill on some of the key capital aspects. What else is going to be transformational for the company this year?
I will start with Rainy River. Rainy River, the main objective of the company and my predecessor, they worked pretty hard. We restructured the balance sheet, but at the end of the day, make it work. It was an asset that was difficult. Going forward, as I explained to you, that we de-risk. When they explore for Rainy River, they highlight the pit itself, but also they highlight also other targets that were never followed because the priority was to operate the mine.
Yeah.
And we'll deploy $20 million of exploration at both sites. And at Rainy, we have a lot of prospect around the open pit, an extension of the pit or showings around the pit. We, for the first time at Rainy River, we renewed 74% of what we mine in a year. So it's a great achievement. It's mainly because we redo the model. We drill RC drilling mixed with diamond drilling in the phase 5, and we'll extend the mine life by the mill throughput by a year. So I think it's the little additions. All the capex is deployed, the equipment is there, the employees are high quality, they are well trained, they are pretty efficient, the working cap is in place. So the only capital expenditures to increase the throughput or extend the mine life is mining. So we want to expose shareholders to that because it will add a lot of value for them. And we have the same capacity to do underground. So we have possibility to expand the resource underground. At New Afton, our main objective is we have D zone under C zone, but we continue the drilling on D zone. We're gonna mine D zone one day, but our job is to push it because we want to explore as much as we can above C zone extraction level in the same manner to reduce the capex and to provide higher return to the shareholders. We have two nice targets. They are new for us. We will develop a 400-meter exploration gallery drift in the upper part of the mine to have access to this ore zone to have better to be positioned to drill it off. But we have upside at both sites, and so yes, we are opportunistic. We will look for other opportunities, but basically we want to squeeze the juice of the fruit that we have, the two fruits that we have now.
Excellent. Now let's talk a little bit more about the balance sheet. In the past, the company had to make some tough decisions to effectively to stay alive. They had to sell Blackwater, and in February 2022, the company announced the strategic agreement with Ontario Teachers Pension Plan. Now this year, as the anniversary of that agreement comes up, the company has an option to change that agreement. What is your thinking there? What do you want to get out of that?
First, teachers, they are an excellent partner for us. We felt their contribution in 2020. I was not with the company, but I think it was an excellent work. Without them, C-Zone is going to be difficult with the balance sheet to build C-Zone. So thanks to them. Yeah, we have three opportunities at the anniversary date at the end of March. The first is for them to be a JV partner at 46%. or to have a free cash flow at 42.5%. And for New Gold, we have the opportunity, we have to negotiate the fair market value of their part of the asset, and we have the opportunity to buy them back. So three things. The first thing is the status quo, the fallback position is not a bad position for New Gold. So we can deal with that. And it's not bad for shareholders too. We have an overhang on our stock price actually because people are thinking that we're gonna raise equity to buy them back, and our market cap is $750 million US now. And if we assume a market value of $450 million for this, it's more than 50% of our market cap. So it's too dilutive for our shareholders, who are really patient and resilient, okay, to be honest. So it's not the objective to do this. But what we want to do is I believe, it's maybe my vision, maybe I'm wrong, but I think we have too many companies of our size, and I think we have two assets, and you want to grow the business, we want to extend my life, and at some stage we're not in the agriculture, we're in mining, and we need to build mines. And the access to capital is difficult, the cost of this capital is expensive, we're all running for talents, we'll have to do some merge to create more capacity in terms of to have a bigger mining house. And we want to preserve the opportunity to buy back the interests of teachers at New Afton, because in case of we want to do a transaction to grow the business. And we believe in copper. I think it's a good commodity for us. Strongly believe of the rationale of copper looking forward. And teachers, they are a good partner. Maybe at the end it's going to be a status quo, or maybe it would be a halfway. So we have to see what is the best for us.
It sounds like there's perhaps potential for that relationship with teachers to even deepen if you're looking at further growth, and that will need financing as well. Let me start talking about that. Now that the company has put out its metaphorical fires, it sounds like you're starting to think about how you can spread your wings and grow. You talk about other assets. It must have been a devastating loss to lose Blackwater, particularly given how that's been taken forward and into development. But it seems that you haven't really lost any time because of the gold price has gone up, but equity prices have gone down, if anything. So you haven't really lost any ground there. So are you seeing a lot of opportunities to add to your pipeline in the future?
Yeah, it's just a question of our balance sheet too. So we're not necessarily, and with our balance sheet, it's difficult to do acquisition in cash, to be honest. But as maybe it's with paper, we'll have to see. We are really opportunistic. We have in-house, we have more capacity because at the beginning of 2022, when Nico Eagle and Pan American took over Yamana, I had the opportunity, and I'm really proud of this because the operational leadership team of Yamana joined New Gold. It helped a lot our capacity to look, because it's always based on people. To be honest, mining is people, and if you have good people and you have talent, you have no limitation, basically. Yes, for sure, you need to have the financial capacity to execute your vision or your dream, but without people, you can go nowhere. So we are well positioned to look at asset actually, and to create value for the partners too. On a grow to grow, take over an asset. If it's not improving the fundamental of the business, you don't do this.
Okay, so now that you're coming out of the headwinds of existential survival, what excites you about your road ahead?
First, I'm excited by the future of copper. So it's copper is 65 to 70% of the revenue, the production of New Afton. And the fact that we will, in terms of production for 2024 and 2025, in terms of copper and gold production at New Afton, we're pretty stable. It's going to increase because the grade, the lower part of C-Zone is lower grade, like C-Zone, like B-Zone, but when we'll just ramp up, it will generate a lot of copper and gold production. If we looked at all the discussion here about the battery vehicles and the need of copper for all the aspect of the transportation, but also the needs for the army, hope that it's going to increase to if the copper price is improving, it would be a nice trigger for shareholders of New Gold at New Afton. And I think that if we can extend our mine life by 2-3 years at each site, it will be a great value added for our shareholders.
Okay. We're at the BMO Metals and Mining and Critical Minerals Conference. I imagine you've had a lot of shareholder meetings or investor meetings. As you mentioned, your shareholders have been pretty patient over the years. What feedback are you getting here on how the company's evolved and performing now?
Our shareholders are pleased by the performance of the company, so I think it's nice. It's not the same reaction, the same discussion than last year at the same date. They are happy. I think they are pleased by the performance. They're concerned about the dilution. They're concerned about how we're going to address the options to buy back teachers. They're interested by the value that we can create with exploration. And I'm having a lot of questions about, Pat, what's next? So, what's next? So, what's going to be, what is your view on M&A? It's difficult for us to talk about that because we cannot, if we work, we cannot say that we work on this. But, I'm seeing an appetite from the shareholders to say, okay, I think the vehicles are too small, more or less irrelevant. We need to put few companies together, but who's going to make the first move? That's the question.
Okay, let's wrap things up, Patrick. Where do you want New Gold to be by the end of this year?
New Gold at the end of this year, I think we want to be positioned to have a season with the what is really important for us at New Afton, more than the commercial production, is to commission the gyratory crusher in season. It will unlock a lot of value for us. It will reduce the cost, but it will mainly unlock because we're restricted by the trucking capacity. So, and it will speed up and accelerate the ramp up of season. So, commercial production and the commissioning of the crusher and conveying system, it's important for us. To deliver the mine plan with discipline, if not slightly more at Rainy River, and the last pushback of phase 4, it's important for us. And the first ore from underground at Rainy River, underground main, that's important for us.
Okay, well, I wish you the best of luck with that. Patrick, thank you very much for joining us today.
Pleasure. Thank you.
And this is Paul Harris of Kitco Mining at the BMO Metals Mining and Critical Minerals Conference in Hollywood, Florida. And if you like what you see, don't forget to subscribe.
Kitco Mining special coverage of BMO's 33rd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.